Hey everybody, welcome to the Closing Beat. How we doing today? Good, good. Hope all is well. Happy Wednesday. Welcome to our show. We're financial advisors. We just like to do the show every day to show you we're here, not playing golf, and like to talk about the markets. We actually enjoy talking about the investments and things like that. And starting in the new year, we'll be one of the only advisors I know of to offer two things. One of them I can tell you, one I can't. We'll be able to manage any account, anywhere, any of your workplace accounts, TSPs, HSAs, 529s, any of that. We'll be able to help you with that, and I look forward to it because I've been wanting to do that for a long time. Hello, hello. Welcome, JN, Kirk, Farner. Comments from me. Aaron Meadows, I love it. Harry, welcome, welcome. Well, let's talk about the stock market here today. We don't have a lot to cover, but some really cool stuff. We'll cover it. And also, I promised I would show the S&P performance when it has a 20% plus year, so we can take a look at that as well. The Fed, we were looking for the Fed to start tapering a little bit faster. I believe $20 billion in normal bond purchases and $10 billion in mortgage-backed securities, which is just fine. I mean, the housing market's doing fine. We don't need them to do that. And what they did is they sped up their bond purchases there as expected. Everything was fine. They said they see rates, well, the consensus is to see rates around 0.9% next year, which factors in about 2 or 3 rate hikes in 2022. So that was pretty much as expected. It really just depends on how much they raise on each one of those hikes there, but most people would assume that's 3 rate hikes. So all is good there. The markets tended to celebrate that there. And you know that the market performance was sort of capped today. I find it fascinating where we actually stopped. Let's start with the S&P here. Go over to the SPX. We'll look at the S&P. Recovering off the 50-day moving average there, and take a look at this. So today is day one of when the Santa Claus rally tends to start. It is 15 days until the end of the year. I shared this yesterday with you. The average market gain in the last 50 years, 1.25%, 1.27% if you're looking further back in time. And what happened today? What happened today? How much did the market gain? Did you happen to see that? So let's go to the open. Real quick here, scroll over a little bit more. Here's the open right here, and actually that would be right there. Look at this first little high right here, right at about 1.25%. In fact, it actually stopped at 1.25%. The first little stop there was right there. A little jostling around through the end of the day. We gained just a little bit better than the average. So far, we are on track exactly as the stats tend to show, right? About a 1.25% gain on the day, 70% time positive over the last 50 years, 64 over the last 25, and 70 over the last 10. We're basically right there, right? It's the same as what we saw, right? I'm not like claiming that these are my data points. It's just the market. That's the way it is there. That's the way things perform. I'm happy to see it, and so there you go. Inside the S&P, you got Pfizer leading the way. Brand new highs, up 6% on the day, along with Eli Lilly. We happen to own it, so we're happy to see that one break out there. Another one that we own that was a great performer out of nowhere, Progressive. I didn't expect anything to happen here, but you got a little bit of a breakout. They got higher premiums. It was like 3.2 billion versus 2.9 or something like that in total premiums that had been written, so much better than expected there. Better financials as far as what they disclosed so far. So that stock got a much needed bounce. Happy to see that, of course. Then you got the names like AMD. AMD off the 50-day moving average in a big way, up 8%. NVIDIA as well off the 50-day, up 7.5%. I actually did not get a chance to close that position. Just put on the position yesterday. All right, well, we'll see what tomorrow holds. It is officially up 49% of the total premium collected in just one day. I would normally take that off. I got sidetracked. I did not. So it'll be coming off first thing tomorrow, if provided that we just open somewhere around here. So nice to see that, of course. I'm happy to see that. You got Generac maybe coming off of lows here, an extended decline, nice little rally with some decent volume there. I don't know for sure that that's the case, but that's what you have there. Public storage and a lot of REITs actually had good days today, hitting new 52-week highs. Facebook, well, about 2.3% higher on the day. Did you know this? Mark Zuckerberg has sold shares of his Facebook stock almost every single day this year. Puts old Alice Walton to shame, right? Almost every day he sold shares. Why do you think that is? You got Salesforce.com CEO selling shares. You got Alphabet, their founders, been selling shares since May. They've been aggressive on selling shares there. You total it all up, basically, you have $43 billion this year in sales from CEOs of S&P 500 companies. To put that into perspective, last year, I remember saying it was 20 billion, somewhere in there. So we're more than double. I'm confident in saying we're more than double what we saw last year. So they are selling. Why aren't you selling a little bit, right? Everybody's like, you can't time the market, man. Okay, they're selling at all-time highs. So just want to point that out. Old Facebook there, he's been selling tons and tons and tons of shares. Moving on to the Dow. It's in third place year-to-date today, but nice one today. Rapidly playing catch-up there. Today was thanks to United Healthcare. We happen to own it. It's going well. I have no real complaints about United Healthcare. It's been one of the biggest contributors to the Dow's gains on the year. Happy to see that, up 3% on the day. Apple continues to hold up here. Obviously very strong. If you, I don't have it. Let me see if I can get this real quick. One of the problems with what you have in Apple right now is so a lot of the technical traders like to look at the spread between the price and the 200-day moving average. Apple does not like to be far away from the 200-day. And I'll try to share a quick example here with you, if I can, of what happens over history. So let's see if I can go back in here. Yeah, just make it bigger so you can see everything. Yeah, pull it up here. There you go. All right, so here is the difference between the price and the 200-day moving average. The average, getting a lot of spam calls today, by the way. That's getting a little out of control. I'm just saying. Can you call Biden? Tell him this. Yeah, like we got to do something here. Let's make something happen. So get mom to call Biden, actually. So you got, here's the spread between the 200-day and price, right? So basically, the further up you move, the further away price is away from the 200-day moving average. This is represented in percentage terms. So the average distance from the 200-day moving average is about 5 1/3%. We are currently sitting at about 30% above the 200-day moving average. How often does that happen with Apple before it retreats? Well, there's 1, 2, 3. I'll give it this one and say 4, 5, 6, 7, 8 other times. Well, in the last 10 years, I guess I'm looking back 10 years, that this has been this extended. What's happened after every one of them? Only one got a little bit more extended before finally pulling back there. So it goes to show that if you're trying to figure out if Apple's extended, here's just another way to look at it, kind of a fun way to point out those kind of things out there. That is a pretty gnarly spread. We'll come back to that in just a second. And so that's what you have going on in the Dow today. Your weaker names were Nike, which has been weak overall, and then you had JP Morgan and Chevron with just some slight down days, not too much. Verizon was down again, but what else is new there? Good performers, you got Cisco hitting new highs. We happen to own that one. I like that at new highs. Slow, steady mover, not a problem there. And Merck and Amgen, some of the biotech stocks, as I pointed out with Pfizer and Eli Lilly a little bit ago. So that's what's going on there. If you look at the Nasdaq here real quick, no guess the Dow update, right? Tomorrow. So Nasdaq off the 50-day moving average today. And really, it's a lot of the semiconductors, right? So AMD, you already saw that with an 8% gain off the 50-day. NVIDIA, we talked about already. ASML, DocuSign, by the way. DocuSign up another 4%. So getting a little volatile here at lows, trying to put in a bottom. Not a semiconductor, though. NXPI is, and that one was higher. Broadcom, QCOM, up 4% on the day. Xilinx, you can just go through a handful of these names, basically just recovering after their most recent pullback there. And so that's what you have in the stock market today. I can point out the price of oil just up slightly on the day. And gold, yeah, finished off lows. It's basically up a 1/4 point on the day. Not too much there. A lot of action in bonds. But really, if you're looking for the excitement on a day-to-day basis, the most action is coming in the semiconductors there. All right, let's take a look at something here real quick. I'm going to go over here first. I'm going to reset this because we don't need to look at whatever that is. And here's what we're going to do. We're going to say the S&P, how often is it higher than 20%? Oh, no, I'm going to do a calendar search. So we'll do it this way. Yeah, this is a little different. Higher than 20% in a given year. And we're going to look back 28 years because that's all the data that we have for the SPY. That goes back to its origination in 1993. It's 28 years, I believe. Yeah, 28 years. All right, so let's look forward here. The S&P's been higher by 20% over the course of a year, 10 times in the last 28 years. Forward stats, it's positive 80% of the time, so momentum begets momentum, I guess. Average gain, 14% over the next year, actually. and median gained 16%. So all looks bullish historically if you want to take a look at that. But how does the year play out? Is it just straight up all year? Is it sideways, then up at the end of the year, the beginning of the year? How does this thing work? So we're going to move to take that data, and we're going to go to a forward look here. But what we're going to do is say, how about the first 30 days, the first 8 weeks, which would be 60 days. Let's just do it like this. 60 days. Let's do 3 months, so that's 90. We'll do 6 months. I'm going to throw in a 9-monther for you there, and then the whole year, which we kind of already know. So let's look up forward. Oh, we need a little loader there. We'll look up the forward stats based on these time frames so we can see if there's anything we can tell from the market's performance after a 20+% gain year. So the data that we're using on this side is only the years, which are all listed there for you, that we've had a 20% gain, and naturally we're not including this year because we don't know what next year holds. So let's take a look. 30 days into the new year after gaining 20% or more in a given year, you have a 50% chance of being positive. The average gain is quite minimal, actually. So January maybe could be a little bit volatile. If we look at the performance in here, plus 4%, 7%, some big moves actually to start the year. And it's the same to the downside. Oh, sorry. Minus 3.5%, minus 4%, minus 2, minus 3. So volatility in the first 30 days, that first month after having a 20% gain, can be a bit back and forth if we're looking back at somewhat limited data that we have. If you look back over 60 days, average gain is 0.72, median 8.6, so it gives you a little bit of an idea what's going on there. There is some wildness over the 60 days. Gains of 6%, 14%, 3, minus 1, minus 1, minus 30. So 2019 is going to be the one that takes you down there in the first 60 days. Otherwise, you're basically looking at an overall gain with a couple outliers, right? Both to the upside and the downside. If we look over 3 months, here's where things really start to settle in. So basically what I see is that any action, volatility, back and forth, it happens at the beginning of the year. Those first couple months could be rather exciting. Be cool to be able to plot day to day, but one thing at a time, right? Let's do one thing at a time. But otherwise, your probability of being profitable goes up as we start to get into the later part of the year. Naturally, the longer you hold something, the greater your probabilities are anyways. But you can see the real gains start to peak up there towards the end of the year. And so the moral of the story, at least initially, would be that first 60 days, let's just throw in the first 3 months, somewhere in that first quarter, after having a 20% gain in a given year or greater, could actually be a little bit volatile. So we'll try to expand on this a little bit as we go, but I promised I would cover that data and share that with you. And plus, it's also just us. We're just testing this, looking for random things that are wrong and stuff as we go. Should be able to sort now. Yeah, you can actually sort now through some of this data and change things around. So we're getting smooth, little by little there. All right, new highs and lows for the day. What do we have? 27 new highs and 10 new lows. Actually, all the new lows, I believe, closed down on the day. Alexandria Real Estate hits new highs, and a lot of REITs actually did well. I put EQR on the list as well. These are not the cleanest breakouts, but we can't argue they are breakouts. It's just maybe not the most textbook. But if you're looking for some, you're going to look in the REIT space. Illinois Tool Works actually hit new 52-week highs, getting stronger by the day. Just a nice pattern. There wasn't a whole lot on the list to choose from. In fact, the rest of them were those consumer staple stocks we've been talking about. The momentum from consumer staple stocks continues, whether it's Coca-Cola, General Mills. Look at that one, just taking off there. So consumer staples getting a little bit more excited. Maybe people know the data about the first part of the year could be a little bit wild. So I don't know. We'll see. It's not too long to wait. Stocks in the news. DWAC. What do they have a name for this yet? Truth. Truth is the name of the eventual app. They partnered with Rumble for server space to try to work out things there. It was a cloud server space agreement with Rumble. I'm not familiar with Rumble. That's another social platform. Cody doesn't know. Yeah, I'm not sure. I think that's the one that I believe got taken down by Amazon or something. So anyways, they may be going to work together there. Got a little pop in that stock today. Nucor down on the day. So, oh, wait, no. Yeah. Actually, got Nucor on the list there. So they got earnings guidance came out there. A little bit below expectations for the fourth quarter, so the stock was down on that. They see a strong 2022. They had a strong 2021, so maybe just not ready to hit the upper marks of what Wall Street set for them. Macy's is actually taking the place of Tootsie Roll in the S&P 400. Lowe's, but 2% higher on the day, lowered their guidance going forward. And they said they were doing a $13 billion stock buyback. These guys aren't messing around, man. That is the big shift going on in the markets right now. Buy back those shares. Be damned the price, whatever it is. They're just buying those shares back. And then lastly, you got Solar Edge is replacing Hanesbrands in the S&P 500. That actually starts in 5 days. So Christmas week, they will be going into the S&P 500 along with a couple others. We covered that already. Yep. There you go. Oh, and a sad thing, Disney fans out there. Today, this was the day that Walt Disney passed away. I forget the year, but it was the year Magic Kingdom was supposed to open, I believe. So, end on a sad note there. If you have any questions, I am happy to help. I will try to do my thing here and see what I can help with. Giving Charlie a little credit. There was Charlie here. Oh, there he is. Yeah, he's putting it together. I love it. First 30 days, we've all due to the potential tax gain of selling. Could be. Yeah, the reason is really irrelevant. And I get that question a lot. People say, you look at data, why isn't this time different because of COVID or, some particular thing that's going on with a stock? And if you think about it, news is a given. It's always there in the market. There were always oil issues. There were, president issues, whatever it may be, wars that were going on. That's all a part of the data. The market was still doing what it was doing. There will be news going forward, both global and all that great stuff. So that all, if you don't make a decision based on this time as different. Why would this time be any different? Okay, so I'm gonna try to catch up here and see what I can do. I'm trying. Yeah. Just over elitist lies about their vaccinations. Oh, yeah. Well, you can't argue the performance of those stocks, though. Yeah. I don't get into the healthcare, biotech side of things. I've just never been interested in it, pre-COVID or whatever it is. Even that. Just the one area of the market I can't. I know I got to participate, but I just, everybody's got that subject where their eyes gloss over and they're like, you can try to teach me all you want. I'm not in on it. 66. There you go. Yeah. Any reason the financial sector declining more than the market? Any reason? So it could be just the idea behind interest rates. It's not declining, though. Go over here. So you have like the most minimal little pullback, right? Handful of big stocks pulling back in there. Earnings is all out of the way, of course. So I wouldn't call it a pullback just yet. They had an amazing run this year. And so now it seems like it's just kind of going to sleep, right? Yeah. Big miss on retail sales there actually today. Very disappointing number. I was going to break down the segments of it. I like doing that sometimes. I didn't get around to doing it for you today. Sorry. Just Vibe says, what's better, trading or investing? Meaning, like, what's better, more profitable or whatever? Most people are not successful at trading. So I would have to say, hands down, probably people would argue investing. Yeah. If that's the question you're asking. Mm-hmm. Yeah, I saw a lot of football teams and with the getting COVID there. A lot of those guys. It's crazy. How am I supposed to bet on the game? What's Thursday night's game? Don't know. Oh, he's not even paying attention. He lost all his money. I want to bet some big dough on that one. I got Chiefs Chargers, and what percentage of all those players are like out because of COVID? Is that one of the games? It was the Browns, right?
That was they were. It seems like a lot of people are having issues, but I don't think anybody. I think it's normal.
Oh, okay. Chiefs Chargers. All right. Well, we'll see what happens there. I got come up with something. Got that money burning a hole in my account that I'll probably never see the money from, anyways. Lennar, yeah, with the earnings coming out there. So is it out already? Oh, Lennar's earnings did come out there. New orders around 14.8. to about 15,000. They expect to deliver 12,500 homes. Gross margins, that's less than expected. 26.75%. That could be part of a miss if the stock is down. I haven't looked yet. 67,000 total homes in 2022, which would put them around 27% total margins. Earnings miss. Sales beat, $8.4 billion. I think the miss is on gross margins of selling or delivering those 67,000 homes. I believe that was the number we were looking for. It was supposed to be about 29%, and I can't find it. I'm pretty sure that was the focus. So stock maybe down. Let's take a look. So after, oh yeah, it's down. $105, $104, trading around, not quite down to the 200-day, right to the 50-day moving average. That's going to be a bearish open for that one tomorrow, and that is probably why. It's that gross margins there with the, I don't know if they were supposed to shooting for more numbers or Wall Street wanted more than 67,000 homes, but backlog is up to 23,771 homes. Wow. Wow, wow. Other than that, besides missing on earnings, you got deliveries up, new orders up. Wow. New orders come in at $7.3 billion. Sheesh. That's up some amount. I don't know what the number is there, but that's I think we were at 6.5, 6.6, somewhere in there. So yeah, it's gonna have a rough start tomorrow, and that's before the conference call, I believe. We'll see what happens. Yep. The Browns, yeah, there you go. So they had some COVID issues there. Try to do the show just one time in a suit. Yeah, everybody probably leave. Everybody probably leave. We get every now and then someone comes along and says, "Hey, you know, maybe we'll buy the company or whatever." And I'm like, no, not in that suit, man. I'm sorry. You come in a t-shirt. I might have said, okay, this could work, but every now and then. What's going to happen tomorrow in the market? If I knew, I would have a bunch of trades on already. Yeah, I don't ever claim to know. I like to follow the stats. I don't really prediction from me is just as good as anybody else, you know. So I couldn't tell you. I could not tell you. What else did I miss today? Yeah, ATVI. Nice little rally there. It's not helping me just yet. So I still have that position on from the other day. Got about, oh, okay. Yeah, late day. So I was a little bit behind today. I didn't catch it. So ATVI got about 23% of the total premium. Southwest Airlines is exactly, just a little bit down, minus 6% there. NVIDIA, I got to take that off, 49% of the total premium. And PayPal still chugging along, now 30%. I was a slacker today. I didn't get a chance to look at much of anything. PayPal, I got 30% of the total premium. I think that can do better though, right? I'll ask you guys. Don't you think PayPal's going to go a little higher? I don't think I'm in a rush for that one. Nice profit too. Okay. Yeah, I'll hold off on PayPal. NVIDIA's coming off tomorrow, and maybe ATVI. I don't know. That ATVI just seems sluggish, right? Not much going on there. Yeah. April Fools would be a good one. Yeah, there you go. Oh, sorry. April 1st. I'll wear a suit. I like it. Be a Santa Claus suit, not a suit and tie. Hey, anyways, I'll wrap it up there. Got to get back to work, doing our thing here. I appreciate you guys watching and everything. Enjoy the rest of your day or evening, and we'll be back tomorrow. Do it all over again. Let's see how you guys are doing with the old super duper guess the Dow. Thank you, by the way, to those of you that bought some stuff for my daughter. It's the little gems and jewels and stuff and jewelry that she makes. The link is in the description below, but she was flattered, man. She get a couple orders. She's like, holy cow, where are these people coming from? I'm like, that's pretty cool. Anyways, have a great rest of your day, and thanks for all your support. Enjoy.